And first of all, today we'll start off with gold. So gold at the moment, where it's poised right now is quite interesting. So I've got the 200-day moving average in red here, where you can see several tests of major overhead resistance, providing a bit of a brick wall to price at the moment. In fact, we've ricocheted between that level throughout most of this week. And it's been an interesting week in terms of the price action on gold. It's definitely at a decision point here as to whether it is going to be able to break out and close above very important overhead resistance, which currently sits approximately at 1,264 US dollars per ounce. A break and a close above that level would really open up the door to acceleration to the upside for gold. Right now, though, it is definitely getting some overhead resistance around this recent highs. In fact, if you just marry up the recent highs here, if you just, I'll just show you this very quickly on the chart. If you just take any sort of trend channel and you can marry up the three highs, 1, 2, 3, and you can see very clearly traders are taking profit at this zone who are buying, and also some traders are going for sell shorts around this zone. Now, from a sell short perspective, if you get gold right here, and this is the short-term top of the market, it's a great risk to reward. Okay, so if you have a look at this in terms of your stop loss, all it would really need to do is be above the swing highs, so approximately the 1264 to 1265 zone. You could look at that on a closing basis, or just look at it on an automated stop loss and a breach above that level. What I'm looking at here would be on the sell side, if it closed above 1264 zone, and if we were selling gold here, I would then look to exit a position on a close above 1264. At the same time, on a close and break above this overhead 200-day moving average, I would also look to be a buyer of gold and potentially take it back up towards the next major overhead levels of resistance. So right now, gold's looking interesting. I suspect non-farm payrolls will be the big mover tomorrow and be the decision maker for gold here, because it is just really consolidating. My blue rectangular box here just shows you how much this price is consolidating and coiling at the moment on gold. There was a bull flag earlier on in the week which broke out clean air from a break above Friday's resistance up to the 200-day moving average. Fairly straightforward trade just to capitalize on a move back towards the 200-day moving average. Found resistance at that level, pulled back yesterday. Initially, we saw a breakdown on the ADP numbers yesterday, which came out stronger than expected. Then into the minutes of the FOMC later on in the evening, gold retraced into the close. So far today, it's not looking that encouraging for gold for the bull side, but it looks good potentially for the bear side if it breaks below 1250. As I said, a good risk to reward, very straightforward for traders. They know where to put their stop loss on this trade. Very straightforward, above the swing high, above resistance, above the 200-day moving average. Good risk to reward if this is a short-term top and a triple top here for gold as well. There could be quite considerable downside. April is normally not a great month for gold, especially as we move into May as well. But the exception to that is the first week of April, where often you can see some follow through to the upside, and it's within the second and third week that normally, from a seasonality bias over the last 5 years, you would expect gold to break down. And that's what I'm looking at. I'm waiting for really at the moment. I'm wondering whether we will have another attempted breakout to the upside, and whether that will get sold into, or it won't be able to break out any higher and look for a potential for another bull trap here, or whether this is it, whether this is the triple top is in, whether it's going to slowly but surely break down, giving a sell short opportunity, or if gold can get the legs off the back of tomorrow's non-farm payroll, depending on the stats and the data that comes out. If it can break and close above the 200-day moving average on a weekly closing basis, that would be quite strong, given the fact that on the monthly chart, gold has produced a strong rejection candle. So you can see very clearly, if we do see a break above approximately the 1263 zone, gold could catch fire here and get going to the upside. At the same time, if this is a failed move, you've got very clearly overhead trend channel on the monthly chart, and we could see a deeper correction start to take place. So definitely decision time for gold. Exciting actually to see how this pans out at the moment.